Hello, everyone, and this is your beginning of the week crypto news update. We start with some spicy news that an amicus brief that was described as devastating for the SEC was filed not by anyone, but by 6 well-known law professors, all experts in securities legislation, and they filed this amicus brief in support of Coinbase against the SEC. They did their research, and unlike amicus briefs that you or I file, judges might actually pay attention to this one because they're experts, they're respected in the field, the judges might actually know them, and their opinion actually does matter, and judges might actually be swayed by their opinion on this topic. Now, who are these law professors? Well, they all come from very distinguished schools like UCLA, Boston University, Fordham Law School, University of Chicago, and Yale, some of the top law schools in the country. And these are experts in securities laws and related fields, so they spent their lives actually researching this stuff. And James Murphy, who's a crypto lawyer, said that this amicus brief absolutely shreds the SEC's investment contract theory. So they filed this on the same day as Senator Loomis, but this is a completely different amicus brief. Senator Loomis's amicus brief obviously had a large impact because she's a senator, but this one says the amicus brief brilliantly traces the history of the meaning investment contract before, during, and after the passage of the Federal Security Act in 1933. So they traced what investment contract actually means, and it completely contradicts the SEC. By 1933, the state courts have converged around a standard for interpreting the term investment contract to mean a contractual arrangement that entitled an investor to a contractual share of the seller's later income, profits, or assets. And that doesn't really apply for crypto, especially not off the exchanges, because you are never really guaranteed income of crypto. You do not own a share of the company. You do not get access to dividends. The scholars added that no state court decisions found investment contracts without these key features. So the SEC is trying to push for something new, and that's much harder to establish than something that's already been established. They noted that after the Howey decision, there was a common thread in how investment contracts were defined. The thread was that an investor must be promised, by virtue of his or her investment, an ongoing contractual interest in the income, profits, or assets of the enterprise. Now, generally, the company and the protocol are separate. The company and the blockchain project are separate. Buying these tokens does not entitle you to X part of the company, and that might actually be a breaking point between crypto and stocks. Furthermore, the scholars noted that every investment contract identified by the Supreme Court involves a contractual undertaking to grant a surviving stake in the enterprise. Once again, buying crypto does not give you part of the company. It might give you part of the protocol, and you might have some voting rights, but that's not true for every coin, but it does not give you part of the company, so the company isn't really issuing its own security. In fact, the scholars argue that contractual undertaking had been the key ingredient that had differentiated investment contracts from other arrangements since the term first appeared. And they are right. So if this is actually taken seriously, the SEC is going to have a very hard time proving against this. According to Murphy, this amicus brief dealt a deadly blow against the SEC's claim that tokens trading on Coinbase are securities. Now, obviously it doesn't work because Coinbase doesn't really promise anyone profit from these tokens. They are just a trading exchange. In my opinion, this amicus brief delivers the coup de grace to SEC's argument that crypto tokens trading on secondary markets are investment contracts. So essentially, like, Coinbase's lawsuit is all about the secondary market. And these guys have just come in and argued, hey, you know what? Coinbase doesn't make any of these arguments. Coinbase does not promise anything. It's just a market to trade these secondary investments. And therefore, historically, they would not be running a securities exchange by the historical definition of the word, either before 1933 or after 1933. So that is a big devastating blow to the SEC. The SEC does not have to respond to amicuses, but judges can definitely take these into consideration. And with 6 respected law professors filing this, I do expect this to have some kind of an effect. Now, John Reed Stark, former SEC official, is saying that the ETF approval or Bitcoin ETF approval could actually ride on the outcome of the elections. If the Republicans win, there is a chance that Hester Pierce could actually replace Gary Gensler, and Gary Gensler could resign. But I don't actually agree with this theory because I think, like, regardless of who actually wins the election, the ETF is going to get approved. In fact, the ETF will probably get approved much before the election because you know why? It's because BlackRock, Fidelity, Citadel, and all those big investment firms have actually filed for ETFs. And the SEC, I do not think, is going to deny them. And another reason is Grayscale is suing the SEC for not allowing a Bitcoin ETF. And the SEC's chances in that trial are not looking particularly good. If you think the SEC is invincible, throw it out the window. They are not, because a lot of people thought they were invincible and then they lost the Ripple case, and they can lose the Grayscale one just like it. The judges in the case were not pleased with the SEC and did not actually see their logic. And the SEC probably knows this, so they might just be trying to buy some time. But I do think they'll approve one because they don't want Grayscale to be the only one on the market. And if they lose that case, they will have to allow Grayscale to have their ETF. Now, the thing is, like with BlackRock and Fidelity, everyone coming in, the market is going to boom. And you know what? BlackRock and Fidelity have influence over both political parties, not just one. So I think both political parties will pass along an ETF that BlackRock and Fidelity and Citadel and all those guys actually want. And I think it will actually happen in January of 2024. And that's 10 months before the election. Don't quote me on that. Actually, do quote me on that. I might just be wrong. But I do think it'll be beginning of next year when the ETF is actually approved. It will not depend on the elections. In fact, the elections won't have anything to do with the ETF, but it could actually have to do with other things in crypto, especially if Hester Pierce actually became commissioner, which is one of the theories if the GOP actually wins the election. Not really sure if that'll happen or not. Not really sure if Gary Gensler will resign or not, but still, it is something to think about that if the agency takes a complete 360 turn, that Gary Gensler will just rage quit as SEC commissioner. He might rage quit eventually anyways because he's losing all these lawsuits, but I think the chances of him rage quitting are much higher if he doesn't have the president's support. But speaking on the ETF, Mike Novogratz has basically said that he has inside information. Knock on wood, I don't really know if I would trust the inside information because all this inside information stuff has generally been wrong in the realm of crypto. But basically, Mike Novogratz has revealed that he has contacts at BlackRock and other places that say that the Bitcoin ETF will actually be approved in the next 6 months. So 6 months from now, right now it's August, it would be February. And I think like by the end of January, we'll see an approval. I don't really know if his contacts are correct because many times these secret contacts end up being wrong, obviously. But maybe he does know something that we don't, even though these predictions have not been great from anyone. So he has 2 asset managers that actually are looking at the news for him. And they both said it's not a question of if, but when the US SEC will approve at least one of the handful of ETF applications. If they approve one, they're going to approve several. Of course, Novogratz with Galaxy Digital thinks it's a big deal because he wants to pump the price of Bitcoin. I think it's a pretty big deal as well. Basically, like he might have some information that we don't have. I don't really know if he knows for sure, but I'd be willing to bet that it probably will be within the next 6 months, regardless of who's in charge of the White House. PayPal has announced that PYUSD will be available for DeFi in the future. Now, I don't think regulators are going to like that, but that could be a big boon for DeFi as well, especially for the ecosystems that can get PayPal's USD, because a lot of people use PayPal, and maybe PayPal can actually pull those markets up as well with their stablecoin. I guess there'll be more trust in PayPal stablecoin than other stablecoins, and that could provide adequate liquidity as PayPal stablecoin actually expands. So that's something exciting, and PayPal has tried to confirm that. I don't know if they know exactly when they're actually coming in, but one of their execs did actually say that PYUSD will actually be available for DeFi in the future. And like I said, that could mean a huge boom for things, DeFi, especially, first for Ethereum and then for the other chains, because it'll probably first be on Ethereum, because I think PayPal's system is built on Ethereum, but it will actually go multi-chain very, very soon. Lastly, Dogecoin, I think, is expected to rise, and I think this sounds stupid, but it is actually probably due to the Elon Musk versus Mark Zuckerberg fight. people are flying to Spain for that fight, and I think it's going to be one of the biggest fights out there in terms of people watching, especially even if it is only online, because the Jake Paul fights attract a lot of attention, but outside of the YouTube verse, no one really knows who Jake Paul is. Everyone knows who Zuck. Everyone knows who Elon is, and I think there'll be a lot of fans and a lot of cheering with it. And I do believe Dogecoin will go up because Elon Musk will plug Doge. There's another reason Dogecoin will go up, and it is because Elon Musk wins. Flawless victory. Fatality.